The investment world is very dynamic. It's always changing, whether that's markets moving from one direction to another or investors becoming increasingly savvy. Our previous models have performed well for our clients, but we're never one to rest on our laurels. And so we're always looking to do better. And we know many clients' concerns and priorities are different than they were from years gone by, such as wanting to understand the rationale behind what goes into the model portfolios, and more emphasis on costs, for example. So in response, we've put more resources behind our research and delved further into the things you just can't find from a fund screening tool. We've also increased the diversification of the portfolios by investing in more funds and lowered the cost of the portfolios by adding more low-cost index tracker funds and ETFs. And this all adds up to what we believe is a much stronger offering that aims ultimately to deliver better long-term returns for clients. In short, everywhere. We deliberately design the portfolios to invest across all the main asset classes, sectors, and geographical regions. We've also made sure not to invest too much or too little in any particular area. So the portfolios broadly invest in the same proportion as the markets do in the various industries and regions of the world. As always, how much is invested in the stock market versus bonds versus alternative assets depends on how much risk you're willing to take in the pursuit of long-term returns. But whatever level the risk, you can be confident you'll be invested in really well-diversified portfolios. So any areas that are struggling won't have too much of a negative impact on your returns, and you're likely to capture the gains of whatever is performing well at any given time. This is one of the most common questions I get asked by clients, and much as I'd like to be able to give a definitive answer, unfortunately it's very difficult to provide. For starters, it depends on how much risk you're willing to take. The more risk, the higher the reward potential, but of course the more volatile your returns are likely to be. You've got to take the rough with the smooth. But to give you an idea of what's been achieved in the past, the historic long-term performance of the global stock market has been somewhere between 7 and 10%, depending on the period you look at, while the global bond market has averaged between 3 and 6%, roughly. While bonds fluctuate above and below this range in any given year, the global stock market has had years where it's risen much higher than its long-term average and fallen significantly into negative territory too. We're market optimists though, and we believe the stock market will do as it always has done throughout history, and given enough time, continue to rise and rise faster than most other major asset classes. And that's why we believe it's one of the best ways to grow your wealth over the long term. But of course, not everyone can stomach the downward lurches, so it's really important to find the appropriate portfolio for your risk tolerance. It may seem like an obvious thing to do to try to predict economic events and the impact they'll have on markets and your portfolio. It's easier said than done though. After all, to benefit, you have to get your predictions right and react faster than other investors. And both are very difficult, if not impossible, to do consistently time after time after time. Not only that, over the long term, even the most gut-wrenching events, such as 2020's corona crash volatility, show up as blips over the course of a long-term investment performance. That's why we believe time in the market, rather than trying to time the market and potentially get it wrong, is the best thing you can do for your returns. So we've set these portfolios up using an all-weather approach. So it doesn't matter what's happening in the markets or the economy or the political arena, there will always be at least some of your portfolio that's working well, come rain or shine. If you're an existing Skybound Wealth client, your advisor can discuss these portfolios with you during your next financial review, and if they're right for you, make the necessary changes. If you have any immediate queries, you're always welcome to call your advisor or any of us here at Skybound Wealth to assist you. And if you're not already a client, contact your nearest Skybound Wealth office to arrange to speak with someone at your convenience. You'll find all the details on our website, skyboundwealth.com. Thanks for watching. With these new portfolios, my team and I are really looking forward to helping you achieve your financial goals.